You've probably heard about the energy crisis, right? In this video, however, I want to show you the broader context of what is currently happening in the world and how you can use this situation to find investment opportunities for yourself. The current energy crisis is the largest global crisis of its kind since 1973 or 1979. Back then, it was mainly the global West that was affected, whereas this time it is the whole world. Firstly, how it all started. In 1995, the energy sector had a 10% weight in the S&P 500 and was thus the fifth largest sector by the market capitalization in the US. From this time, the energy sector experienced an incredible boom period, peaking in 2008, when the Brent crude price hit $140 per barrel. The galloping energy prices from 1995 to 2008 led to an investment boom. By June 2008, the energy sector had increased its S&P 500 index weight to 16.2%. The exuberant month of June 2008 was the summit for global energy as the world plunged into a devastating credit and subsequent economic crisis. Massive overinvestment in oil, gas exploration, significantly higher cost level in the sector that were shaped during the boom years, caused profitability and return on capital to go down. Demand was also not growing at the same rate as before, as China's urbanization was maturing and its economy was getting more energy efficient, while the global economy was suffering from the effects of the financial crisis. From 2008 to 2021, the global energy sector underperformed the global equity market by 9.4%, giving up its previous 13 years of outperformance. The global energy sector declined 21.2% during the period from 2008 to 2021. Meanwhile, tech companies have seen huge gains, which obviously attracted more investors' attention, and our lives have been progressively digitalized over the last decade. There are smartphones, automation in factories. Every year we produce more and more electronic equipment, so the demand for electricity is also growing. However, with the advancement of digitalization, investments in the energy sector did not follow. Recently, there have also been such problems as Germany's abandoned nuclear power, Russia's geopolitical play, and extraordinary weather patterns, reducing electricity production from hydro and wind turbines. It is also worth remembering that in the coming years the US government and the UE want to reduce CO2 emissions. So we will also switch to clean energy. As the saying goes, every crisis is an opportunity, right? It is no different in this case. The world needs changes in the energy sector, and they will surely come, and with them new investment opportunities for us. The current energy crisis is giving renewed impulse to the energy transition, but as well as involving a move away from fossil fuels in favor to renewable energy. It is also about global electrification and developing the necessary infrastructure. Electricity consumption is likely to double as a result, even on the most conservative assumptions. Driving this transformation at the desired pace calls for a huge mobilization of capital by 2050. This means that the energy sector will have to develop very strongly in the next decade to meet the demand for energy. It will certainly be one of the fastest growing sectors of the economy. Therefore, it is worth looking for investment opportunities there. Acquiring capital is not the only problem of the energy sector. The quality of the ideas developed is just as vital as the financial resources, if not more so. Answers are needed to the key questions. Where will the energy come from in the future? What it will be used for? And how? The variety of options available ranges from new materials through artificial intelligence, hardware and software, to commodities and efficiency improvements. This is interesting from an investor's perspective too, because successful innovations usually create exponential growth. The cost of capital and capital markets are still at historic lows, even after the recent rate hikes. It is also worth paying attention to REPowerEU, which is the European Union plan to end imports of Russian gas. This plan presents the substitutes from which the European Union intends to obtain other sources of energy by 2030. These types of tips give us little hints as to which companies can grow in the coming decade. Like, subscribe, comment, and see you next time. Bye!